So, the very thought and idea of our banking system is quite complex and a little worrying if you actually were to sit down and think about how the banks can take your money and essentially have it in their possession that you've loaned to them and let them borrow without any real contractual obligation for them to repay it back to you besides a warm and fuzzy feeling that you get from an FDIC insured sticker that you see at the window when you are standing in front of the teller. However, bank runs on Monday could potentially leave us all broke on Tuesday if we were to allow this fragile banking system and mental construct of our money being safe in these bank vaults to wear thin on our emotions and let panic sink in, worry, anxiety, stress, and see a similar instance of what we saw happen with Silicon Valley Bank, where they lost 40 something billion dollars in deposits in one day, thus sending their stock price tanking some 60% in just a few hours and causing many other banks, depositors, and the FDIC, US Treasury, Federal Reserve, and the President of the United States to really take close look and consideration as what's happening with the banks, what could potentially happen further if they didn't take action, and how this could completely and utterly destruct our entire financial monetary system, which is pretty much based on a faith based belief backed idea of ones and zeros that the more money that we inject into the system, the more phony money can be pumped out. However, with that being said, if we were to allow this logic to consume us and we all went the route of taking our money out of the banks, then it could potentially set off a domino effect, cascading, catastrophic cascading catastrophe, basically, of all the banking systems failing, the fractional reserve system showing its weaknesses, and all of us pretty much SOL. As we all do rely on the banking system, the fractional reserve banking system, and this money that is then multiplied and allowed to be used in a variety of ways, whether it's a mortgage or a personal loan or an auto loan or even the line of credit that a business may use to support its operations and make employee payrolls. Therefore, we need to really understand the possible implications of our actions, what is likely to happen, and how we can plan and prepare to protect ourselves from unnecessarily sealing our own fate, so to speak. And we can see here that this was the second largest bank failure ever. And more importantly, Elizabeth Warren stepped up and told us exactly what we needed to hear.
There will be another financial crisis. Of course, when the crash comes, the big banks will throw up their hands and say, it's not their fault. Nobody could have seen it coming. And then they'll run to Congress and beg for bailout money. And let's be blunt, they'll probably get it.
So let's be blunt, they'll probably get it. The big banks that are too big to fail will run to Congress and ask for help and more than likely receive it by way of bailouts or, at the very least, bail-ins. Neither of which are necessarily good things for us, whereas one would ultimately utilize taxpayers' dollars to bail out the banks, as we've seen in the past, and the other would utilize depositors' money to bail in the banks, which ultimately will cost us even more. But more importantly is what is floating around right now currently on Twitter. Now, I'm going to share this information with you guys because this was brought up in a message that I received on Instagram. And I really do appreciate you guys sharing this information with me and helping to bring light and more information, knowledge, and education to others who may have similar questions, many of which I'm realizing that are questions that people didn't know to ask. Okay. So it says, hi, Kevin. TD Bank in Canada sent letters to customers yesterday that they were moving to digital. And if customers do not agree, customers must tell them, and they will no longer be able to use their bank card, online bank, or TD app. I was wondering if you heard about this. What are your thoughts? There are lots of Twitter posts and TikTok videos about this. So, again, thank you for sending this and pushing me in a direction to find out more information about this and share it with everyone. If anyone has any information to share with this, please feel free to comment down below or contact me. My information is in the description. And let's see what Twitter's got to say about it. So, at first glance, just taking a look at this, um, I'm not super excited about TD Bank. And here's why. This post says people seem to not understand the TD Bank's new agreements. They separated one agreement into two, and one is for access cards and one is for online banking app. Every year at this time, they send out new agreements because they are either raising their fees or changing their term of service. Terms of service. So, folks, this is very important because sometimes we get this information and we kind of run with it and we make our own determination and decision based on maybe a headline or a strategically worded title or a thumbnail or what someone said or a Twitter post. And this, folks, in my opinion, can lead to severe devastation and the possibility of what we don't want to happen, which is a bank run of epic proportions that would completely, in the process of trying to save yourself and your money, would ultimately destroy our economy as a whole. So we can see here as we go through the post below it, got off the phone with a TD rep. And when I explained about not wanting to sign on to the digital ID program, he left me on hold for 10 minutes, came back and said that there are two parts to the TD access agreement. One allows you to continue as you have been without updating your ID. Two, allows you to sign on to the digital ID program. So it appears that there are two parts. He told me I won't lose my access if I choose not to sign the digital ID part. Um, Things will continue as normal with me using my normal access code, just wanting to share what I was told. Again, anyone who has any information about this, any TD Bank account holders, or even if you work for TD Bank, perhaps maybe it will be in our best interest to share actual factual information with people before they panic. And further going down this rabbit hole of TD Bank, which is a Canada-based bank. This post here says, "I just opened an account with TD Bank and already having the worst experience, literally the worst bank ever. They don't even give you immediate credit like most banks with their ATMs don't deposit your cash in the account or even warn you that their machines don't work." Now, this is really interesting to me because I think that I don't think that it's necessarily fair to say that it's the worst bank ever when perhaps maybe you didn't necessarily do your homework and become as educated as you should, especially with a financial institution of which you're placing your money into. Much like the Chime video for the Chime Financial Services, you might want to go check that one out because apparently a lot of people think that Chime is a bank and it's not. And unfortunately, not having the full story and all the information could potentially lead you at risk and find yourself in a situation, in a position where you're unprotected by these safeguards and insurances like FDIC. Now, additionally, let me touch on this again. Additionally, now, granted, I'm not trying to incite bank runs, but also I don't know if I will be depositing cash. I might want to hold on to as much as possible. Um, but okay, so I got scammed and my bank dispute got declined. I'm down $800 I don't have. Don't be stupid like me and fall for this. Any help advice would be great. This is what the site looked like. It was a text the scammer sent me. So apparently, this scammer was utilizing TD Bank to pull off this scam. And again, go check out my previous video from just the other day where I went through and showed you guys how these scams work and how to avoid them because this is quite possibly going to be the biggest panic, worry, and fear about losing money here moving forward. Not so much the banks collapsing and crashing, uh, while on the brink of a recession. However, these scams preying on people and their fears of a bank crisis and collapse and cash crisis, top US banks, top Canadian banks, top global banks, and their potential systemic risk and risk of contagion that the media is throwing around, that then makes it even more likely for people to be susceptible to these scams through text messages and, of course, through the comment section down below of these YouTube videos. Now, it's not just my YouTube videos, it's pretty much every YouTube video on the platform that even gets like a remotely decent amount of views. There are so many scams in the comment section. If you see a WhatsApp number, if you see a text me, if you see any of that, folks, you have to know that that is not real. That's not real. They're phishing. They're trying to take your money. So this one says, "Thank you, TD. You have officially put me out of business. I put a stop payment on someone fraudulently trying to remove money out of my account. You charged me the stop fee, but let the charge go through anyway. Now I can't pay my employees and have to close the doors." Well, this is unfortunate because I don't know the severity of this, the amount of the transaction, but if one transaction like that can wipe you out, then that is unfortunate. And as I've said before, folks, you should be having conversations and discussions and talks with your employers, the managers, the CEOs, the presidents, the CFOs, understanding where they are and the risks that they could potentially present to you through an instance like this, a banking error that would literally wipe them out, uh, make it so that they couldn't make payroll and ultimately shut down and close the doors. These are real life scenarios, and it's better to be prepared than to be blindsided. This one says that beware of TD Bank US, most inconvenient bank. They are not letting any big transactions to go through and flagged it as fraudulent activity. Locked my wife's account, asking us to go to the branch to unlock, but have no branch in Texas. Doubt TD worried about it or worried of bank runs. I would imagine that any bank is probably worried of bank runs, but at the same time, for instance, if you find yourself in a situation where you bank with a particular bank and now you have moved and you've relocated to a new city that or state that doesn't have any branches of that bank, you may want to reconsider that because, not having the ability to physically go to a branch while these brick and mortar branches still exist, in my opinion, would be a huge drawback, and I wouldn't feel comfortable in that being my primary bank. My account was blocked and cannot access it. Tried to call TD Canada to unlock it, but they ended up making it more impossible for me to access my funds, claiming I failed several authentication when I wasn't even aware that I was being authenticated. And this actually happened to a very close person to me recently, although it wasn't a bank, it was an American Express card. And literally one false response to a question locked the account, canceled the card, shut down everything, and put them in a little bit of a bind when they were needing to use the card to make a purchase. And I do think that right now the everyone's on high alert. So basically, what's going to happen is we're going to see higher levels of security. They're going to be more stringent. They're going to be less lenient because they know the situation that they're in, the panic, the possible risks, and they are not looking to be on the hook for any fraudulent transactions or chargebacks if they can help it at all costs. And it says here that it would be very tragic for everyone. Maybe TD Bank would like to explain that part to everyone loud and clear. So far, their silence has been deafening. Now, TD Bank has a little bit of a reputation, folks. As we can see here, that TD Bank reaches a $1.2 billion settlement in a Ponzi scheme lawsuit. TD Bank, and this was just reported just a few days ago, TD Bank will pay $1.2 billion to settle a lawsuit alleging its involvement in an infamous $7 billion Ponzi scheme orchestrated by disgraced financier Alan Stanford more than a decade ago. Toronto Dominion Bank agreed to pay 1.205 billion to a court-appointed receiver who will in turn pay back victims of the scheme, but denied any wrongdoing, the bank said in a statement Monday. So it's one of those things where it's like, yeah, you would love for TD Bank to be voice these and explain things loud and clear, but it almost seems like TD Bank may prefer not to do that. Stay quiet, keep people kind of in the shadows, keep them guessing, be a little bit vague, but also pay out and try to settle and sweep some of these things under the rug. Now, granted, this particular situation with Alan Stanford was 10 years ago, a decade ago, and quite different than how the banks operate. But we do have to understand and realize that the banks are somewhat of a multi level Ponzi pyramid backed by the government to fund their operations. But with that being said, TD Bank, based in Canada, what are the protections in place for those account holders? As TD Bank, it would be covered under the Canadian Deposit Insurance, um, CDIC, not the FDIC. So, just a little heads up, deposit insurance protects your savings if your financial institution fails. And you don't have to apply or pay for deposit insurance. The Canadian Deposit Insurance Corporation automatically insures your eligible deposits, and this applies to deposits held at CDIC member institutions in Canada. But here's what's most important: what deposit insurance covers. The CDIC insurance eligibility deposits separately up to, or I'm sorry, CDIC insures eligible deposits separately up to $100,000, whereas FDIC is covering you up to $250,000. And it says that the deposit insurance covers the following types of deposits: savings and checking accounts, guaranteed investments, GICs, guaranteed investment certificates, and other term deposits, foreign currency, for example, USD. If your financial institution fails, you don't have to file a claim. CDIC will pay you automatically, which is good news. It's good news. However, what is the recourse? Because let me play this clip for you guys again so you guys can hear what she has to say.
There will be another financial crisis. Of course, when the crash comes, the big banks will throw up their hands and say, it's not their fault. Nobody could have seen it coming. And then they'll run to Congress and beg for bailout money. And let's be blunt, they'll probably get it.
So if that's the case, and we were to see a banking system collapse, which odds are we probably will see more risk and like meaningful pushes in direction of that happening, just based on the pure fact and realization of how the banking system works. And it's all based on faith, and the more uncertainty that we see, the more likely we are to witness a crash and a failure, similar to what we saw happen at Silicon Valley Bank, a bank that had been operating for like 40 years, that all of a sudden was trying to do normal bank things, but it scared people, and rumors started floating around, and then ultimately, yada yada yada, the FDIC stepped in and took control. Granted, perhaps maybe the executives of this bank could have made better and wiser decisions that would have prevented this, but nonetheless, what Elizabeth Warren had to say is, relatively accurate here, where, we will see another bank collapse. However, in Canada, if that were to be the case, do they have Congress to fall back on? Do they have Congress that's going to bail them out? And what's going to happen to the depositors that are only going to be made whole up to $100,000, opposed to $250,000 here in the US? Things that we should really take into consideration, folks. Silicon Valley Bank's failure, could something similar happen in Canada? Well, it says here that according to theconversation.com, American business magnate Warren Buffett once famously observed, "You don't know, or you don't find out, who has been swimming naked until the tide goes out." Silicon Valley Bank was exposed last week by rising interest rates, leading to an old fashioned bank run where the bank's customers rush to withdraw their money all at once. The failure of the 16th largest bank in the US highlights the vulnerability of its niche business model in the digital age. Could something similar happen in Canada for the largest Canadian banks? The answer is no. But for smaller, niche financial service firms, recent history suggests they should not be complacent. So let's really understand and evaluate what's being said here. For the largest Canadian banks, the answer is no. However, but for smaller, niche financial service firms, recent history suggests they should not be complacent. Now, it's not necessarily saying yes, but it's definitely not saying no. So if you're a part, associated with, involved with any way these smaller niche financial service firms, you may want to really evaluate your position, especially when we can see how I think it was Roku had $500 million tied up in Silicon Valley Bank at the time of the collapse. And they were unsure how much of that they were going to be able to have access to before announcements were made by Mr. Biden and the FDIC, as well as Etsy was unable to process payments because all their money was tied up in Silicon Valley Bank, as well as some payroll processing services, systems as services or SaaS, one of which I use to send out notifications, and I actually just received a apology email from them about that being a problem and the money being tied up. So it doesn't have to be the fact that you are specifically um, a part of a big bank only and you have nothing to worry about. These smaller banks, these smaller niche financial service firms are integrated and tied into our economy in so many different ways that you may be surprised at how it could potentially negatively impact you. A vulnerable business model. Whereas the first step to assessing any vulnerability in Canada is understanding why Silicon Valley Bank failed. Silicon Valley Bank ran a risky business. It used short term cash deposits from technology clients to buy longer maturity U.S. mortgage bonds. This maturity mismatch may be profitable in good times, but can wipe out an investor in bad times. And the rise in the interest rates over the past year resulted in $2 billion of losses on Silicon Valley Bank's bonds, facing a potential credit downgrade. And let's see here, facing a potential credit downgrade, and the bank tried but failed to raise equity to shore up its balance sheet. And when this news spread over social media, it led to rapid online withdrawals of deposits and drained Silicon Valley Bank's cash reserves. U.S. regulators seized the bank to stop the bank run, which is good and bad at the same time. And anyone who was in the middle of that at that time, Roku, Etsy, payroll processors, they probably weren't feeling so great that the FDIC stepped in and prevented, the U.S. regulators stepped in and seized the bank to stop the bank runs, because that meant that they couldn't get money. But at least it didn't drain it completely to a point of which we were at a point of no return. Meanwhile, short-term deposit funds and long-term bonds, which again, this was part of Silicon Valley's failure, was Silicon Valley Bank's vulnerability can be seen by comparing its balance sheet to its peers. At the end of 2022, Silicon Valley Bank depended on short-term customer deposits to finance more than 80% of its US $212 billion in assets. The five closest regional banks, Capital One Financial, First Republic Bank, KeyCorp, M&T Bank, and U.S. Bancorp, had a similar share of assets, but the big four U.S. banks, J.P. Morgan Chase, Bank of America, Citigroup, and Wells Fargo, had more diversified funding. Silicon Valley Bank invested this cash in mortgage bonds and other securities representing 60% of its assets. Silicon Valley Bank's figures was almost 3 times higher than its closest peers and more than double the U.S. Big Four. And to offset the risk, Silicon Valley Bank held more cash than its closest peers as at 6% of assets. But when the bank run started, the fire sale of bonds at a loss was not enough to offset the electronic withdrawal of deposits. So how safe are Canadian banks? Could a similar bank run happen north of the border? Well, the answer for Canada's largest banks is no, as I mentioned earlier. Canada's big five banks, Royal Bank, TD Bank, Scotiabank, and Bank of Montreal, and CIBC remain among the safest in the world. They are large, diversified, and well capitalized. They have experienced leadership and are closely monitored by a respective banking supervisor. Canada's Big Five have nearly identical funding profiles to the Big Four U.S. banks, and the Big Five's larger share of loans makes them arguably safer, as most Canadian mortgages are insured by the Canada Mortgage and Housing Corporation. So, folks, I mean, this is some good news, honestly, for the simple fact that Canada's biggest banks, the Big Five, Royal Bank, TD Bank, Scotiabank, the Bank of Montreal, and CIBC, remain among the safest in the world. However, we can't ignore the fact that there are other institutions, financial institutions, that will rely on these bigger banks and the mental construct of society and business and the economy to not make a run on the banks and continue this fractional reserve lending uh, multi-level Ponzi pyramid to keep this going. Okay, hope that makes sense. I really hope that makes sense. However, for those who are looking for ways of boosting their bank accounts, because not all of the viewers on this channel have money in the bank to worry about or even have the ability to make these bank runs with, we can see here from Finance Buzz 8 unusual ways lazy people are boosting their bank account. I'm not calling you lazy. I'm just reading the title here. And it says, do you feel like your bank account is draining week after week? Well, don't worry. We all have been there, and we're here to help. We've done our research and found some strange and unusual but legit options to help you stack your bank account without having to leave the house. And some of these will help you save. Others will help you earn some extra cash to pad your wallet right away. Now, I'm not going to spend a lot of time on this, but I'll run through it pretty quick. We've got earn up to $83 every time you win this viral game. It may sound ridiculous, but solitaire cash. We've got try out new games and earn gift cards from Amazon. Pretty cool. Ask this company to pay off your credit card debt. National Debt Relief. Download the gaming app that paid out over $2.3 million last year, Cash Giraffe. Earn $200 cash rewards bonus with this incredible card, the Wells Fargo Active Cash Card, where you can earn $200 after spending $1,000 in purchases in the first 3 months. Cancel your car insurance. Now, don't just cancel your car insurance and ride around illegally, but you can save money with Finance Buzz and using this tool to find cheaper car insurance. Pay no interest until 2024, December 2024. That's a great way to put more cash in your pocket because it's not going to interest with the Bank AmeriCard credit card, Bank AmeriCard credit card, and earn up to $100 or more a month playing bingo on your phone. Sounds pretty cool. I'm probably going to try that one out. I like bingo. But folks, we have to really be mindful and pay attention to what's going on here. We have to understand the implications of our actions and the possibility of trying to do what we think is protecting us could actually cause catastrophic problems and begin to push over these dominoes that once they start falling, it's going to be hard to stop. By all means, folks, feel free to comment, reach out, comments, questions, concerns. 100% free links in the description down below. And if there's anything you want me to cover in future videos coming up next, then by all means, feel free to reach out to me. I want you guys to have the most accurate information, the best possible chances of survival and success. I want you guys to make some money. I want you guys to save some money. I want you guys to invest some money. I don't want to see the banking system collapse. I don't want to see anybody negatively impacted from what could happen. And I want to see us get out of this high inflationary time, this recession, possible depression, and move on to bigger and better things, building wealth, growing portfolios, creating diverse multiple income streams, passive income streams, and being able to put money away. Diversity, security, cash flow, folks. Again, 100% free links in the description down below. If you want to contact me, my information is there as well. Until next time, you guys take care. Be safe. I'll see you real soon.